All right. Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for March 31st, 2025. We are recording this at the new 7 p.m. Eastern Time, and um, this is episode number 471. So my name is David Kosminer. I'm the creator of TimingResearch.com, and you should be seeing my charts on my screen right now. And it's an exciting, exciting week in the markets, so we have lots to talk about. So today I have arranged for um, several great guests. Harry Boxer, Alaina Nicole, and Hans Albrecht are our panel today. And the option professor is back to moderate. So I'm going to go ahead and turn it over to him.
Okay, thanks, David, and thanks everybody for being here today. We're going to have a very good show because we got great guests and we also have a lot to talk about. So, I'm going to start out here with regards to we'll just welcoming Hans, Elena, and Harry. How you guys doing?
Great.
All right, good to
Hey, fantastic.
absolutely. All right, well, let's get into because you guys all do different things, I know. So we'll have a nice talk here tonight. Let's start with Elena, and just to get an idea, what are you thinking down here on this S&P? We had a nice turnaround here for a while today. It looks like it's fading a little bit in the aftermarket, but what's your feeling down here?
Yeah, this is my favorite ticker, so like I'm so excited. But yeah, so today I actually had an alert on around that 5,500 area. I know the ES dipped to like I believe it was like the 5530s, and then the buyer stepped back in. So I think right now we'll probably move sideways. That would be my guess. Of course, anything can happen, but I think sideways until Wednesday for sure. Maybe we get a risk off. I don't know. I'd be happy with that too.
Yeah. Do you use the RSI much? Because I noticed at the
Yeah.
lows there was a big divergence, and that made me want to get in once I looked at that divergence on the 1 year graph, and then
Mhm.
I saw a turn on the 5 day graph, and obviously that was a good time to hit it around 55.60 and 55.80. Did you notice that a little bit as well?
Oh yeah, I like to use the RSI. I think of it more as like a sentiment gauge. So if I'm trading upside, like I just want to see it like holding above that 50 range, and
Right.
then opposite for below. So yeah, today we came up off that and we really kind of banged our head against it, but we had some buyers come back in. I know I think it was the Qs and then a lot of the tech. We filled some of those gaps from this morning. I'm just curious to see if it holds with everything coming down this week.
Sure. Now, Harry, I know you could care less about a lot of this stuff because you focus on what's going on in the immediate, and that's obviously not a bad thing to do. But did you have
Right.
many of your stocks get some pretty good turnarounds today? And did you enjoy any of that?
Oh, yeah. I mean, every day at detectrader.com, we find stocks that are trending intraday, whether it be a good or bad market. So, but I do care about the direction of the market. It's always easier to trade in the direction of the market as opposed to having a day. And we've had many days where the market was down 300 points on the Nasdaq 100, and we had stocks that are up 30, 40, 50%. It's a question of what's trending intraday. And, since we're day traders and swing traders on my side, but I do care about this chart. If you look at it, the thing that sticks out for me is the rally back looked like to me wave two of a five-wave decline right to the prior low. You draw a line right across that prior low, um, and you'll see it comes right to where we peaked out, just below the moving average too, which
Now,
is also
are you using the chart we have now, or are
yes,
you
yes,
okay?
yes.
Okay, I thought you might be showing a chart, but I wasn't seeing it.
No, no, no. The one you have, the one that's up there, it strikes me that the rally back came right to the low that we had earlier last year.
Right.
Oh no, it was January, I believe. But if you draw a line, I don't know, David, can you draw a line on that? Straight across the prior low. Not no, go up.
Like that?
No, further
Yeah.
up, all the way up. Keep going up. I'll tell you where to stop. No, no, I'm talking about the prior low.
Oh,
Not
I
not
got you. No, I see. He's looking at that low from 2025, maybe January.
yet.
Yeah, and you said the rebound rally came up but couldn't get through there.
And
So
right to it now,
that's now I'm seeing it.
Mm,
Yeah.
technical analysis 101. No, that's not what I'm talking about, but it doesn't really
yeah,
matter. You,
I'm
you
sorry.
got it.
I'm not wait,
If
sure
you
what you're
if
saying.
you if you look at January 2025, you go straight up. There's a low point right there. So you see 2025 right
Over
over
to the
there.
left. Keep going to the left.
Yeah. Up, up, up.
Right there.
Yeah.
Mhm.
No,
Right.
lower, down. I'm going to the prior low back
Yeah.
there. Not this one,
This,
that one.
No,
That's
no,
it.
no. That
So,
one when
okay,
he
now
is.
go.
There you go. Right there,
Perfect.
buddy. That's it.
Okay. Now, if you
oh,
take a look at the line that goes straight across, it comes right to where the rally peaked.
Yep.
And it was
Perfect illustration.
right, and it was
oh,
right
oh,
underneath, right underneath of that the moving average, which I think is that a 200-day? Yeah,
yeah, it's 250 EMA.
right. So we
So
barely got above. We barely got.
Harry, just to be clear, your account started with the rally towards that number, and that number was the first, the one, and now we're in a two on the down.
No, we're in a 3. From the top down to that low is at
Oh,
wave
now I
one.
got you. No, now I got
Right.
you. You got a one, you got a two, and
And
then
this,
the third is where you ring the bell, right?
well, here's the bottom line. If we break the
Yeah.
low here, it's going to go down a
Yeah.
lot further than most people think.
Right,
Well,
right. In other words, that's why I'm trying to make it clear for people because I understand what you're saying, but
right.
maybe everybody doesn't. You say
Well,
basically we peaked out at the 60, 200, whatever. We come
right,
down to the 5,500. We
right,
bounce back up, but we can't get above that former high, low area. So
right.
so you had your one move, then you had the short two, and the two never went anywhere near the high, which means it's even weaker than you think, right?
And
And
technical
then
analysis.
basically now you're three, you're looking for an acceleration to the downside potentially, and there's
Only
money to be made on that one.
only if it cracks that double bottom.
Yeah, yeah,
Then
yeah, yeah.
it's likely we could even go down to that low back in August of last year.
Yeah.
On this,
And then you'd be looking for a bounce. And then the fifth one will also
right.
take your socks off a little bit, right?
That's exactly right. Now, I'm not getting bearish on everybody, but I am
No.
telling you, when you look at that chart, if you don't see what I see, then you're fooling yourself. The moving averages are rolling over,
Yeah.
and the market barely held a double bottom today. Now, I also
Yeah.
will tell you this: in bear markets, Mondays and Fridays you'll see rallies. Midweek, the market goes in the true direction of the market. If tomorrow's the down day, we're likely to break the lows and go down to at least that next line you have down there. I see another line down there.
Yeah.
At about Anyway, bottom line is the measured move in an Elliott wave, 5-wave decline, and this is only wave 1 and 2, and maybe the beginning of 3. Now, wave 2 could be back and forth in this area, forming a big wedge or a consolidation zone, and
Okay.
then we go lower. So
Right.
even that we may get some rallies in here because
Yeah.
the market it was oversold. But I'll also tell you that the McClellan oscillator only got to minus like 127. I mean, typically we'll see 240, 250 at least. So I don't think we're anywhere near oversold. We don't see the intensity. We don't
No
see the
way.
baby. We haven't seen it throw the baby out with the bathwater.
Nope.
8, 10, 12, 15 to 1 negative ratios. Nowhere near that. We're seeing
No.
4, 5 to 1.
Yeah.
Okay. So I'm only saying that this could be the beginning of a much bigger drop.
Yeah.
I'm a permeable, but I'm not an idiot. If I see the market roll over, it's gonna roll over, right?
Right.
And so every day we play the ultra bear shorts. I like the TZA, the UVXY, and the SOSX. I think
Sure.
I think if semiconductors are leading this market lower, just like they led the bull market higher. And I'm not saying we're in a new bear market, but we are, I think, beginning a bear phase.
No, but these things peaked out in July. Look at Microsoft. Hadn't done anything since July of last year. So we've had plenty of warnings that this thing was going to unwind. Now you're just seeing it. The VIX is another thing that comes in hand with your other indicator in that
Exactly.
we haven't seen that August
No,
5th kind of get out of the thing. So yeah.
All we've seen is high 20s to 30.
Yeah.
I mean, I remember, believe it or not, when that thing reached 80 something. And
Yeah.
I've seen 40s, 50s, and 60s a lot. So
Yeah.
this is nowhere near panic levels.
No.
This is nowhere near the intensity we see at bottoms.
Right.
Yes, a short-term bottom maybe. I do want to read you something if I can indulge me for a minute.
Sure.
I read something from technical analyst Jonathan Krinsky over at BTIG, and
Yeah, sharp guy.
This was very poignant. Okay, he said it's the worst monthly decline since September of 22, and the worst since March, the worst month since March of 2020. Okay, but are you aware that a big down month in March is very rare? Only 7 times since World War II have we had a decline of more than 3% in March. And interestingly enough, all 7 of those occurrences lost 3% or more. The April following it was an average of 6% up. So and only one time did it not go up. So all I'm saying is the odds of a better bounce or some kind of test of that high again, or the declining moving averages, or just a lateral movement sideways for a month or so, I think with what's going on with tariffs and with the announcements coming up, they may take another hit, but I think that's going to be a buy signal. And hopefully they make a lower low because I want to see that more intense selling on the downside before
Yeah.
I'm willing to call a bottom. And so we've
Yeah.
just talked about why.
Yeah. Elena made a good point that there's a gap on the VIX up at 34. So if we do take out the lows, the VIX goes up towards 34. That might be an area where you might get that bounce area that you're talking about.
Right. I also
Yeah.
want to I also want to point something out. Over the years, and I'm doing this more years than anybody in this panel, I can tell you that when you try to chart an indicator like a VIX or an oscillator, you're fooling yourself. Those indicators are only overbought, oversold. Forget about gaps, in my opinion. Forget about moving averages. You got to, it's a strictly, is it up to 40, 50, 60, or is it down to 8, 10, 12?
Yeah.
That's where you get the, that's what you got to look at on
Just the
on the big,
number, just the number. That's it.
right, right.
Yeah. All right. I'm going to turn it over to Hans, who is a premium crusher. Sounds like a violent thing out there, Hans. You know, you're going to crush those
Huh.
premium. Anyway,
Yes.
I know you have a view on this, and I'd love you to share your view on what's going on.
Well, I'm a premium crusher, but I'm getting some help from the market here. It's crushing everybody. I think this day of liberation is so far is just liberating people of their money. So
Yeah.
I don't know if it's working out too well. I'm not sure how that's going to turn around, but I am a VIX watcher these days. So the VIX event this time was really unlike August. August was very much a vol type event, like a 2018 sort of a mini Volmageddon event where nobody was hedged and everyone got caught with their pants down when the market started coming off on the yen carry trade unwind. And so that really propelled the VIX higher. Everyone was completely offside on that. Dealers were short tons and tons of calls, and there was a resulting squeeze. So this time it's been very much more of an event sell-off related to really what is probably very, very quite seriously deteriorating fundamentals. So this is quite a different event. And I remember I hosted a show for Leduc back in August, and we were hitting 5,100, and I said, we're going right to 6,000. And we did. And I don't usually throw out big things like that, but it wasn't, I'm not a genius. I looked at all the data. It was fantastic. The economic data was fantastic. Confidence was fantastic. Consumers, businesses, people spending money on everything, Broadway tickets, travel, hotels, you name it. There was no reason to get bearish whatsoever. This time, I think there is some concern here because obviously, Trump is trying to do something that's I can see his vision, but in the meantime, we're in this sort of purgatory where we need to get from A to B, and we're not quite sure how difficult that's going to be, given what he's doing and kind of taking a torch to a lot of things. And that's really killing confidence, right? So we're seeing a lot of things fall off the cliff. So this is a very real sell off, and certainly that goes along with what Harry's talking about, along with technicals. It's not pretty, and we're getting some bounces in here. We got down around 5,500. And on the Leduc show, I sort of said, listen, VIX, remember we were kind of coming down towards 5,500 3 weeks ago, and yet the VIX was compressing, and those out of the money puts were also compressing. So we had 2 down days where the fixed strike vol was basically coming down. And so for listeners, that just means there's not much panic in the VIX complex, right? People aren't really setting themselves up. If you see those out of the money strikes start flying in terms of implied vol, that shows you that there's still a lot of embedded fear. There wasn't. And we had that 200-point rally. I said, we're going to get a 150 to 200-point rally. We got a 300-point rally. So I was off. We got a massive rally. And I said, this is going to be technical. It's light at the end of the tunnel temporarily, but when this rally stops, it's going to be light at the end of the tunnel because there's a freight train coming right at you. It's going to be a very different kind of light. And sure enough, we've sold off here. I will add to that that we had this big JPM caller position that was restructured today. So I'm sure some of the folks here watched that a little bit. And it's been the talk of the town because it's this, it's sort of an example of how derivatives, option positions are really kind of maybe the tail wagging the dog, or maybe they're the dog these days because it's really they're so large, these hedging flows. I was a market maker for almost 15 years. This is exactly what I did. I had short gamma positions that I had to chase around. That wasn't very much fun. I much preferred long option positions that allowed me to react positively to gaps. This time we rallied up to 5,800. We started to sell off, And those puts, the 55, 65 puts that dealers are short from that caller, were about a 5 delta. They were not a problem. But when we started to get down towards the low 5600s, that's when they became a problem. It starts to snowball. You have all these leveraged ETFs that have to start selling, and it just creates this momentum. And this morning, I told some members, I said, listen, I think we're gonna probably bounce tomorrow. I was wrong. We bounced today, but I said, listen, you're gonna get this restriking. So what this JPM caller fund does, and it's a $20+ billion fund, is it now moves its positions to the next quarterly expiry. And what that does is it takes a lot of short gamma out of the market. And for listeners, short gamma means volatility. Positive, nice, juicy long gamma means support. It means walking through mud. It's nice and slow. That's what you want generally. And so we got the bounce. We saw that, especially after 2 o'clock, they started to basically everybody front runs this thing because it's long a whole bunch of deltas. Dealers buy all these positions. They're long a bunch of, they got to sell the market futures, and everybody runs ahead of them, right? That's the game, right? You figure out who's got the big position. Let's do it ahead of them. And so we sold off, and then as soon as that sort of played out, the new positions were restruck, and you could see starting from 2 o'clock, we just continued with that rally into the end of the day. So the bad news, if I could just ramble on a little longer, the bad news was that we were kind of set up for this kind of sell-off. The good news is we've removed one large leg of problem from this position that was sitting there. I'm not saying that's the only position. Some people think gamma is gospel and all this stuff is the only thing going on out there. It's not. Obviously, we talked about fundamentals. We talked about, confidence heading over a cliff. There are still some big problems. There's huge damage on the charts. Maybe we can muster a little bit of a rally in here. That's kind of my stance, that maybe we can come back as we look past this Liberation Day, whatever that means. But we've got some important numbers on Friday. We've got employment. We've got Powell talking. There is plenty for markets to digest. For now, I think we're taking away some of the negatives, but the reality is that things are not looking that great out there. And this is going to have, if the bulls take control, this is going to have to be a big climb the wall of worry at this point.
Yeah, we've got some very important stuff coming up the rest of the week. Tomorrow, they're going to come out with the ISM manufacturing numbers. Then on Wednesday, of course, we've got Trump and the tariffs. And then Thursday, you're going to have the services, but also the trade deficit, which is supposed to be exploding to the upside, front running the tariffs. And then finally, Friday, you've got the jobs report. So I don't think this week is going to be lacking for news. Alaina, I wanted to get a little bit of feedback on which one of these kind of reports. Obviously, the tariff is a big thing, but what other of these reports do you think are going to be market moving?
Yeah, I think definitely unemployment. What I don't really know what Powell's gonna say, or well, I guess he's kind of on a loop right now. But Powell, when he speaks, he usually brings volatility into the market. So I am looking forward to that. I think like I said, the biggest thing is Wednesday, the tariffs and just the market reaction. And like I'm a scalper, like I'm predominantly a scalper, so I'm really just here for the momentum.
Yeah.
But as the market pulls down, I am definitely nibbling off some of these strong companies to work my way back up with them. But yeah, I think anything that just moves the market this week, I'm definitely going to be tuned in for.
Yeah. Hey, Harry, I know you're not going to be looking at a lot of these things as far as your trading, because obviously you keep everything on a fairly short leash. But do you think, that the banks, for instance, they've got earnings coming out on April 11th? Do you think that, they say that JP Morgan and these guys are making a ton of money during this drop. You would think that everyone's paying their credit cards because it's 4% unemployment. So do you think there could be an opportunity in a JP Morgan going into the 11th if the prices are down, because they could simply knock the ball out of the park when they announce on April 11th, and the stock, if it's way down, might be a great opportunity?
Maybe. And then let me tell you what I'm thinking. If you bring up a chart on the FAS, which is the financial Direxion Financial Triple Bull. It's a triple. You take, to me, it's the makings of a head and shoulder top, and I'm concerned because if you draw a line across the three bottoms, and the prior high, and you move below that, and it's gonna take the whole market down with it, because the financials, and if the semiconductors, bring up the SMH for a second.
Yeah, but one thing, Harry, the semiconductors are already in the toilet. The banks are just pulling back. If the
No,
banks go, if the banks go from pullback to an acceleration to the downside, you definitely could stick a fork in these markets, right?
And more importantly, to me, there's three groups I follow, and they have been great to me over the last 15, 20 years. SMH for semiconductors,
Right.
FAS for financials, and LABU for the biotechs. You bring that up a second, you'll see how weak that is. LABU. Okay. And it's actually the worst of the three, because you can
Wow.
see it keeps making lower lows and can't even get above the moving average. It's a
Wow.
downhill race. It's a downhill racer, and it's at multi-month, if not multi-year lows. Okay, so when you take that in conjunction with the topping pattern in the SMH, if you take a look at the SMH, by the way, that's a non-split adjusted chart, because they do reverse splits in those ETFs. But if you take a look at that chart, and you're saying you think they've had a big drop, I think go back a little further. Just go back a little further. Take a look at that. It's a
Oh boy.
massive top forming.
Yeah.
And if they take those lows out, we're coming down. And if you look at the FAS now, compare it with this one, take a look at FAS real quickly. You'll see that we've had a massive uptrend, and if they break the financials, then the whole market's going to hell in a handbasket.
Oh, and there's no doubt. If you see J.P. Morgan at breaking 225 and going down to 180, it's going to be a bar the door, Katie kind of thing.
So maybe you get a short-term rally, because I think there's a possibility we get some positive, or at least buy the bad news type thing. But I don't think, unless that gets above 255 in that area, that's really going to go anywhere. I think we're in a topping process on all the financials. Look at Goldman Sachs, same thing.
Yeah, I mean, what happened to deregulation and all these mergers and IPOs? Not going to happen.
If that's not a head and shoulders, I don't know what is.
Yeah.
Okay. And it's right on the moving average or near it. It's got a descending neckline, meaning it's actually downsloping, which is really even worse. So to me, something's amiss in the financial sector that could come to a head pretty soon. And if you take that in consideration, along with the financials and the biotechs, we got along with the semiconductors and biotechs, the market could have a big problem here. And it wouldn't surprise me if we had, and I'm not bearish, but I'm looking at this stuff and I'm saying, if you're a technical analyst and you look at these patterns, breaking down long-term uptrends, rallying back to resistance at moving averages and necklines of hidden shoulders and topping type patterns, and then rolling over. I have a list called Boxer Shorts. I went from 40 to 80 this weekend alone. That's how many stocks are turning bearish on me. So, and I mean, obviously bearish. There's hundreds turning bearish. But there's also, so that's why I'm telling everybody every day when we trade, if you're trading something on a short-term basis or intraday, you better be playing with stops, because this market's treacherous.
Yeah. Either way.
Yep.
Turning to you, Hans, I got a question. We've got these gold deliveries into COMEX going through the roof. 45% something up on January, 25% up on February. Lord knows what it is for March. And we now have gold getting past 3,100. So, I mean, it's getting way away from its moving averages. Is there a reversion to the mean coming at some point? Or do you think this is more like a parabolic, almost like a Bitcoin rally that was going to just be beyond the imagination?
Yeah, I think gold is it's maybe a bit of a head scratcher in terms of the recent move here. I think it's caught a few shorts flat-footed here. And I have to agree with you that I look at skew and kind of the fun stuff under the hood too. And the gold skew is actually kind of interesting. It tends to be sort of weighted in the call side, right? People tend to play gold for the upside explosive potential on the options side of things, and so that upside call skew tends to be pricey, with the puts being the opposite. We're actually seeing the complete opposite of that right now, and that has been the case for a few weeks now, which sort of led me to think that the move had started to get exhaustive at this point, right? So, but yet we keep going. Right? And so, guys, smart guys, Rude, Sprott, all these guys sort of going, well, look, nothing's really changed. Balance sheet liabilities are going to get probably worse and worse, especially sort of off balance sheet liabilities as well. So, basically you're gonna continue to lose, you lose your sort of value in your currency effectively, and that's a problem. So they think gold's going to just keep going and going and going. It's got me a little bit fooled here. I have a couple of mentoring students that are talking about playing the downside, and I'm having to look at the skew. It's not particularly expensive from an implied vol standpoint. So, I think there's an interesting play there for a reversion to the mean. I think so. I don't think, I think it's got to relax a little bit here before it keeps going. But it's got some people fooled at this point. That's for sure. I don't know. What do you think, Harry? Is this you're the chart master here?
Yep. Well, I'm going to tell you something. If you look at the pattern, and like you just said, it's almost exactly what it did in September, October, and then it went to a 3-month period where it came down and moved sideways and consolidated. It has to do at least that. It's getting ahead of itself. In addition, bring up the chart on silver, and you'll see the negative divergence. Silver's not keeping pace. It hasn't gone through its prior high, and even though it looks okay on the charts, it's unimpressive. And I'm telling all my people, if you weren't in the gold play earlier, then don't get into it now because the risk reward is not good, my opinion.
Yeah,
Now,
I mean, silver usually lags, right? Silver is kind of the sort of, I don't know, maybe industrial
except
sort of sister
I
to gold.
agree.
Yeah,
I agree, except for one thing. When the gold makes a new all-time high and silver is nowhere near that, I mean, nowhere near it, I think it's a problem. So
so it's a bit
we shall see.
squeezy here.
Yeah.
Yeah, yeah.
And look, the market always goes further than you think it's going to go, both up and down. We all know that. But so gold could go to 3,300 in a flash and then die. So I mean, but if you want, like, I'm also a believer and you can tell your students that I said this because you told me they were thinking of going short gold. Never stand in front of a runaway freight train. You're going to get run over.
That's right. Don't pee into the wind, right? Not
There
not
you
a good
go.
idea. I agree, and I think that's what I'm telling people basically. Don't argue with the market. You can argue till the cows come home over fundamentals. Just take what you're given, and set yourself up with sort of low limited risk strategies using options, and that's the way to go.
Yep.
Alaina, do you have any feeling on the gold? Are you trading the gold, or are you strictly doing like the E-minis and the Nasdaq?
No, I've been watching gold and I actually own some gold, but I've been watching gold and also the 10 year. But no, I haven't been actively trading it. But I've been watching this run. It's insane. It's interesting to me because like Bitcoin and gold are kind of like, I don't know, I just feel like everyone was saying Bitcoin was like an inflation hedge and it's not doing what I thought it would at this
Yeah,
point.
remember when Bitcoin was going and gold wasn't going, and everyone was saying, well, there's a new sort of sheriff in town. It's Bitcoin, it's digital gold. We don't need the old gold anymore. And really, since then, gold has really outshined Bitcoin in many ways. And Bitcoin is just kind of looking like, yeah, I looked at a chart the other day. You overlay Bitcoin with leveraged kind of NASDAQ, and it sort of looks the same over 4 or 5 years. So I almost wonder if Bitcoin just is kind of taking on a different sort of texture from what it used to be. Once you get institutional adoption, and once something goes a little bit more mainstream, it probably starts to act a little bit more risk on, risk off, rather than this kind of underground secret thing that people know about, and that you should, it's a vote against the man. And I don't know if it's that anymore. It just seems to be more risk on, risk off to me.
Well, that's a beautiful top pattern, isn't it? And then look at the down channel on it, and it's in a bear phase, period. I told all my people when it broke 92 that this stock could be 70,000 just like that. And it got down to 77, I think. And look at the bear flag is forming underneath the declining moving average. So we have wave 1, 2, 3, 4. I think we got one more wave down to about 68 to 70,000. I think you're going to cut a Bitcoin about 40,000 off the high. You watch.
So
You might be right.
you're not believing in this tripling after halving that was supposed to take it up to 150. You think that game is come and gone?
Well, even my projections were 120.25, but it never got there. It double topped to 107.89 up in that area, and then broke down underneath the lows of November, December, January, snapped back and failed right there, not only at that price movement, but at the declining moving average, and that's where it rolled over and now formed the bear flag. Take a look at the last couple of days. That's a broken bear flag too. If you draw a line across the tops, you draw a line across the bottoms, you got a new down channel.
Let's
Go back
let's put up a micro strategy, because to be honest with you, I think that's the car to drive if you're in Bitcoin, because the guy's got all the coins to begin with, and if it really goes, this thing is going to go flying. My feeling is, as long as it's above 250, you can still keep the light on for the bulls. But if you break under 250, it's game set match. What do you think? Let's go put it up there and put some moving averages on. I'm looking at a 5-year graph just to get a little bit bigger view.
Which is the correct symbol? This
The
one?
middle.
MSTR.
right.
Used to be called MicroStrategy. Now it's just strategy.
Oh, okay.
MSTR.
I love trading that thing.
Oh, believe me, when it's at 140, 160, and then when it comes back down to 250, yeah, those are good times to do it. In the interim, you got to stay away.
You know what? You know it's even better. MSTX, the ETF. It's
Oh my goodness, that's
better
a
leverage. Better
widowmaker.
leverage. Yeah.
But this one's got. Does that have the good volume?
Check out the Vine. Well, yeah. Look at the Vine mine, but look at that spike.
Yeah. Oh no,
Options
well that's
trade too.
Yeah.
You can trade options on this. This is leverage on leverage, and you can trade options on leverage. So you can get pretty crazy with this stuff.
What's the symbol on this one?
MSTX.
MSTX.
MSTX. I think there's an MSTU as well. I don't know if they're both.
Well, what's U? What would that be?
You was a bull. This MSTX is also a bull. You're right. There you go. They're both bullish.
Oh, yeah, I don't know which one has the better options volumes, but one interesting thing about MSTR I noticed lately is that the implied volatility, a lot of option pricing has kind of exploded lately, of course, with the VIX and the movement that we're seeing. It's quite low in MSTR. It was trading down.
It's consolidating now. It's rather than going from 150 to 500, it's now trading between 250 and 3.
Yeah.
And also, like I say, those premiums were off the charts for a while there.
And you can take a look at Coinbase and its ETF CONL.
Yeah, Coinbase doesn't look very good.
I know.
But I'm saying MSTR, I mean, Coinbase could be affected by how many people are using it or whatever.
Yeah, Coinbase is a bit more sort of intermediary, crypto in general.
Yeah.
MSTR is very Bitcoin.
Yeah, same with
I
Mara,
think
MARA, same thing.
Yeah.
a collapse in MSTR could be kind of catastrophic. I could just see a lot of people trade that thing. A lot of people sell puts on it. A lot of people are involved thinking that, Saylor is this sort of, this god kind of character, and they're really trusting him. And I don't know what it's trading at, 2.5 times the underlying holdings, but this could really lead us to a very difficult period. Maybe another crypto winter at some point if this thing starts to fall apart.
All right. What about a close above 350 though? There's no question a close above 350 might tell you the game's back on, right? On MSTR. On MSTR.
Bring up the chart again.
Yeah.
I think the play might be just a good old strangle, something like that. Just it's starting to look kind of cheap for me.
Yeah, I'd say, but it's directionless in here. Between 250 and 350, it's kind of directionless. So if you wait for a close above 350, you could go back up to 500. If that Bitcoin ever got back above 100, and because right now it's kind of who knows where it's going, right?
You're defending that 200.
I'm looking at a completely different chart. I'm not sure MSTR, MicroStrategy.
I'm looking at a 5-year graph, but it's a weekly. I'm looking at a weekly.
Oh,
Yeah, that's MSTR.
But then, no, this isn't a weekly. What is this?
This is daily.
Daily? Yeah.
No, that's the 5-year.
There you go.
You see where I'm talking on the 5 years. As long as that blue line's holding up, I'm not getting bearish. And I'll tell you another thing is, if they change the tune, which can happen very quickly, and this Bitcoin started rising because it didn't take out the 75 grand low and it starts going the other way. Believe me, that's that down channel there. If it broke to the upside, which would probably happen a close above 350, there's a lot of real estate above. But like right now you're holding on for dear life with that moving average. But again, above 350, you'd go from trading range to breakout.
You better not get below 230.
No. And like I say, I wouldn't do anything with it here, to be honest, because you don't have any evidence that it can hold 300 even.
No question.
But like I say, there's this is the kind of thing that could go to 600 if it really got going, because they're so leveraged to the darn Bitcoin.
That's
So
all scary.
definitely something I think is worthwhile keeping an eye on.
It's a mover. It just moved. It just bounced from 235 to 340 in an instant, just a few days. So it can move. It's definitely a mover.
Let's put the Nvidia up there because I want to hear you guys see. My feeling is this thing could collapse down to $80 or $90 very very quickly because of the deterioration. And I
Well,
don't know, did they call off the AI revolution? Because everything from Constellation Energy to Cameco with the uranium to micron technology for the storage, they all seem to be on vacation.
Yeah, but today on my news service, briefing.com, there was a big article about how spending for AI has been way overestimated, and that
mhm.
they said if the economy starts getting weaker, that spending is going to be cut back, and Nvidia is not going to have the kind of year everyone thinks it's gonna. And the charts are telling me that. Take a look at declining tops and declining bottoms. We've been in a bear phase since December, that peak in December on this one, and right now the projections are that this could be $90. It could even be 75 or 80 if the market goes into a bear phase.
Yeah. There's nothing underneath here, so there's nothing
Right,
to catch it.
right.
Nothing to
And it's
catch it.
very heavily owned too. This is, I remember Torsten
Overowned, indeed overowned.
over-owned all around the world, not just in the US. You look at what foreign ownership of US stocks has done over the last couple of years, and Torsten Slok put it very well. He said it's basically a big leverage play on Nvidia. A lot of people around the world own this thing. And if this story continues to be frayed at the edges, which it has been, there are a lot of people who can potentially get out of this thing. So it's definitely, this is a big, big problem for the market in general.
Let's talk a little bit about energy because energy is has done well, and one of the reasons it's done well is at $70, these guys can make a lot of money. They're not putting any money into capex where they're actually looking for oil. So they got all these free cash flow coming in. They're buying back stock. They are also distributing it to shareholders. And at $70, this game could go on, whether it be Exxon, Chevron, Shell Oil, Hess. I mean, they all have had pretty good runs. Alaina, you're pretty much doing the indexes, but do you watch the energy a little bit?
Oh, absolutely,
Okay,
absolutely.
good.
Yeah, I think I'm really just like I said, I know I talked about Wednesday a lot, but I just want to see if there are any just like additional tariffs that are going to affect the oil markets. And that's really what I've been keeping my eyes on, as well as inflation. I know we got like a hot PCE reading last week.
Yeah.
So but it does look like it's found a nice base, at least for now. It bounced up, and I'm really just curious to see where we go from here. And then also, I know things are kind of, well, I don't want to say things are heating up, but I know like Trump and Putin have been kind of going back and forth, and I'm just curious to see like what if anything else comes in to affect these oil prices.
Yeah, the geopolitical factor.
Yeah.
Yeah. Let's put up some of the majors, though, because I mean, this is where the winning is going on. I don't know if people want to buy something that's going up lately. The CVX, that's your Chevron.
Yeah, I think energy is your leader
That's
on
where
the
the
year,
money's
right?
being made. Yeah, that's where the
Yeah,
money's
that's
being
where
made. Yeah.
it's your number one sector right there.
And if you look at Royal Dutch Shell, SHEL, they have 15% free cash flow. That's a fabulous free cash flow. And,
Well, I
and
think that's
yeah,
natural. I think what you've seen is you're getting a bit of a move from digital into real things again, right? You're sort of looking at people are looking around going, well, I don't know, AI is maybe not a great story. And not to mention, I don't know why anybody doesn't talk about this, but keep saying, listen, AI is going to disrupt areas. Like I have some very, very smart students, tech CEO. He says, the whole software as a service, like you take Salesforce, it's done. CRM service, it's done. Like AI is going to completely and utterly disrupt certain areas. Forget about quantum. That's going to disrupt the whole world. AI is changing things in very, very serious ways for a lot of businesses that up to now we thought had really, really wide moats, very good, solid businesses. Things
like
are going to
Google,
change.
like Google.
Like Google, look at Google.
Yeah,
Even I kind of like Google. I love YouTube. I think it's one of the greatest assets in the world. But
it is
guess what
great. Yeah.
I'm doing? Lately, I am starting to use Grok more than Google. I am putting that out there. I just said that to my wife yesterday. I said, you know what? I think they might be right. Not maybe it's not happening immediately, but I'm sick of just seeing a whole bunch of crappy ads that I don't
Right.
want to look at. I want to
Right.
get to the truth right away, and I'm going to go on Grok and get it.
I don't even like listening to a song on YouTube and in the middle of the song they throw an ad at you or something like that.
No.
Yeah.
So
But yeah.
there's some reality to this threat to Google, to that part of Google's business. I'm starting to buy into it a little bit more. I'm
Yeah.
late to the party, boys and girls.
No, the put side on Google has been a friend to me, so I'm all into it. In fact, last week when it went up to 175, slapping some puts on it and riding it down to 150 here has not been a bad deal. Harry, you do the biotechs a lot. I mean, do you want to share your screen and show that screen, and we can get into some of the stuff that you guys do so people can understand? Harry, you want to throw because you've got a fabulous screen that shows you how you follow things and how you identify things that are on the move. So get into that a little bit, Harry, so people get a better idea.
Hey, hold on. You should see my charts.
Not yet.
It's loading now, and
Yep,
now I
yeah.
see him.
Yeah, look at all that data that he's following. That's fantastic.
And now you're seeing GRRR in front of you?
Yep. Grr.
Okay. This is check out this chart. I've been following the stock and put a swing on it right there when it broke out in the 6-7 range. It exploded into high 20s, formed a beautiful wave. In my opinion, this is wave 1 and 2 and 3 and 4. Today we broke out in wave 5, maybe. But the quantum stocks look amazing to me. And look at the volume picking up too on this one. It's traded 44 million shares today, or 4.5 million, sorry. It's thin enough where it only needs 10 or 20 million to rip it. I'm looking for a retest of the high in the mid 40s and then maybe even a 60, 70 range.
Is this a company called Gorilla, or is this a fund, or what?
No, it's a company called Growth Technologies, and they're involved with it's software and quantum stuff, and
Okay.
It's really had a big turn institutionally as well.
I hadn't heard of it. Yeah.
And the other one is QBTS.
Well, and that one I know.
Okay, and there's Red Cat, which has come down, and the other one I follow in that group is Rigetti, which I spotted coming right out of the base. See the breakaway gap here?
Yeah.
And then a wedge form. When it broke out of the wedge, we went long at 3.5 to low 20s in less than a month.
Yeah, I hit the calls on this before the meeting because I thought that that meeting that they had over in San Jose would get these things bid up, and it did. But then now what you're thinking is these things that got bid up, they've consolidated, and there could be another leg up, or do you think the party's over? Or
Well, I am looking for one more wave up, but hey, you never know. And if the market goes into bear phase, I'll drag everything down with it.
yeah.
I think they're acting relatively well considering what the market's doing.
That's why. No, I to be honest with you, when I left the party after they spiked up, because when things spike up, that's order imbalance. Order imbalances don't last, so that's why I thought it was a good time. But it hasn't really buckled.
Yeah, agreed.
You know? And also the nat gas group. I'm not a big commodity guy, but look at the chart on Boyle, which is the nat gas ETF.
Finally, right?
Yeah, and look at the breakout of the falling wedge here.
Yeah.
And I think you're headed to 110, 12, 120, maybe 140, 50 eventually. We'll see. Don't forget this stock was a reverse split stock, so there's a lot of room to go to the upside at some point.
Hey, Alaina, do you have a screen that you could share, or did you want to explain a little bit about some of your techniques and things that you do?
Yeah, I'm happy to. Let's see. So I do love my indices.
There you go. Yeah, sure.
Is there anything in particular you guys want to look at?
Well, how about some of the things that you regularly keep track of so people get an idea of what you kind of are looking at?
Yeah, so I love the indices. Very big on just economic data. I just enjoy it. And I don't know. I like watching the Fed and all the reports. So I'm very heavy on like the catalyst side of that and just trading that momentum. So like your SPY, your Qs, DIA, IWM, I like SPX. Also the futures. I do get into the futures as well, but let's see. I'm normally trading you guys on a lower frame. Is that okay? If I pull it
Sure.
up?
And I'd like you to talk a little bit about the IWM, if you would, because
Yeah.
I see that 195 level as being really important. And it is such a undervalued versus the bigger stocks that I'm just wondering at some point, is it going to be the deal of the century?
I think the interest rates with the small caps they just play such a huge role in them. So
Yeah.
I think that's gonna really determine how bad this gets for the Russell. Just the high inflationary environment, or not high inflation, the high interest rate environment is just not good for your small caps. But yeah, I think like you can see the bulls came in again defending this right around
Yeah.
200. So
Yeah.
that's almost game time, like either we're going to
Yeah.
hold it or it's going to get nasty. We've almost got like a bit of a head and shoulders here going on too.
On the interest rate front, though, Alaina, it might be good for you is that Goldman Sachs is looking for three Fed rate cuts this year. Three
Mhm.
Fed rate cuts is exactly the antidote for what these guys ail, I think.
Yeah, absolutely. And it's just like I said, there's a lot of things going on now, just fundamentally that are inflationary. I know we haven't mentioned like the Panama Canal, but that's like a huge trade route. So like that is, being contended for with China right now. And then you have our PCE went up and just little things like that, the tariffs, of course. So it's kind of like a play by ear right now. And I think we're gonna see a lot of, if not just flat out fear, at least I think we're going to see some hesitancy for bulls in a lot of these.
Yeah, and clearly, if Harry was correct with his idea of the count might be showing an accelerating downtrend, they probably won't take prisoners on any of these indexes.
I do want to say one thing, Jim. I don't know if you guys are aware of this, but this is the biggest divergence in 30 years between small caps and large caps. And
Yeah.
and
Wow.
and in 30 years. And if you take a look at, the possibilities, I'm hearing from some very, very brilliant fund managers and institutional guys, they think small caps, which are so undiscovered and so ignored for so long, maybe, and if you start to see where the action is on your day trades every day, there's these stocks that are doubling and tripling overnight. They're going from 2 to 4 and 3 to 7, and those kind of moves we're getting on small cap stocks, not only because they're thinner, but because uh, they've been ignored for so long. And
Yeah.
I just really feel interest rate or no interest rate, small caps. I also saw from a major brokerage firm saying the same thing. And James Alshulter, I don't know if you know who he is. He's all over small caps. He thinks they're the play for 25.
And when we last had a turn in technology after 2000, that was an extremely good time for small caps between, I think, 2001 and 2005 or something like that. They had a pretty good time of it. So
Right.
there could be a cyclical change. As we've already seen, value is totally outperforming tech growth. So growth has clearly topped against value. And so maybe the natural progression would be after they jump into value, then they would jump into small caps as the money would come out of the growth if there's no growth. So
Mhm.
the money will get washed around in a different way. They're not going to all go to Europe because Europe has their own set of problems despite all the enthusiasm. And they're not going to run into China with a communist guy leading it. So, the money may be more comfortable rotating into value and also into small caps and mid caps versus, running into or just hoping tech comes back, which, could be a waiting for Godot kind of thing.
Yeah,
But
I agree.
yeah.
Yeah.
Now, Hans, I want you to show us your secret sauce. So, yeah, if you could put something up there and discuss what you're seeing, or how you help people.
Well, let me go here. How do I get this thing going? Um,
You should see a green share button.
there we go.
Yeah.
The option.
Okay, it's loading now.
Yeah, so along the
Now it's
lines of what I'm trying to find this chart here, but it basically shows kind of the concentration, very in tune with what you guys were just talking about, which is
we're
this
s-
concentration.
we're seeing presentation slides.
Oh, presentation. Oh, can't find the slide that I'm
Okay.
looking for. But what I was going to say is the last time we had 2 years of extreme concentration in stocks was about 25 years ago. And so folks like Harry are going to remember those, like old guys like us are going to remember that stuff. But and after that, we ended up with a really flourishing kind of small mid cap market, a real sort of expanding, a broadening out of interest. And that could very well be, we've just had a couple similar years of extremely, extremely high concentration, really kind of sort of almost feverish moves into AI and all that stuff. And that is unwinding. So on the one hand, I'm kind of looking at where a lot of the growth in markets is, where the earnings are. And you can't help but go back to certain names, like a Meta. Amazon isn't very expensive, cheaper than Walmart practically, or as cheap. like there's some value there. So we can't say this is like the dot-com bubble because it's nowhere near 100, PE stocks like Cisco. So I think there's going to be some compelling value in stocks that are really delivering the earnings. But at the same time, I believe there still will be a sort of broadening out. And I do believe what we need is, at some point we're going to get those lower rates. They're going to come. I know it for now. We've got a little bit of sticky inflation, but you can bet those rates are going to be lowered at some point because I don't think inflation stays all that sticky. There are some reasons for it to stay somewhat elevated for now, but there's nothing like a good slowdown in the economy to take care of that problem. So I think we do get them. I think we do potentially. I've been wrong on IWM so far, but I think we are going to get that move into other areas of the market. So I think that's kind of an exciting trade as well. And there's a lot of value out there. I think somebody was saying on Friday that if you take out most of the mag stocks, like if the mag 7, 8, 10, whatever you want to use, the market wasn't really, at least until Friday, wasn't really down that much, which is quite extraordinary considering what's happening out there politically and with the tariffs and everything going on in the world. So there is some evidence of resilience in areas of the market not called Mag 7, right? So there is some resilience there. There are some stocks out there kind of looking past the horizon and going, you know what, there could be better times ahead at some point. So as much as we talk about some of our near-term bearishness, there could very well be a pretty nice rip your face off rally in here at some point once things get sorted out. So that's me. I'm like Harry. I'm kind of generally bullish. Short term, I've been bearish since 6,000, but I'm not going to be bearish for that much longer. We'll sort of see how things play out. I feel like maybe we've got to get down to the low 5,000s for the market to be kind of at a valuation that people are going to like, but no guarantee we get down there, of course.
All right, sounds good. And I just was wondering if anybody else had any other markets they wanted to talk about briefly. Alaina, did you have anything else you wanted to add? Or why don't you be more specific on when people contact you, exactly how they can benefit? Do you have webinars? Do you have information you can send, or exactly
Yeah.
how do you keep in contact with people?
So I've got it's Investing Bay on all my socials, but I have a community on Slack, and I drop news and things in there. We do live trading, and usually the open or around 1 o'clock. That's kind of my favorite time to come in for, momentum, things like that. But yeah, really, when there's anything going on, I try to keep my eyes on different markets because I know people trade different things, and I just like to help people learn how to read price action because I feel like at the end of the day, that's what it all comes down to. And also being able to manage yourself. We do a lot of that too.
Like a psychological or mental part of trading?
Impulse control, yeah, all
Yeah.
that.
Yeah. Believe me, that comes in handy. It comes in handier than the charts, right?
Yeah,
Yeah, because you have to have a discipline. If you don't have a discipline, you're not going to be around long.
absolutely.
Yeah. Harry, I know you've got the trading room, of course, and you've got many things to help people. Can you just briefly go over them real quick?
Yeah, the TechTrader.com always offers a free 2-week trial, and I think you guys should uh, take a shot, join in, and I'm trying to share my website. Hang on one sec.
Yep.
Should see it. That's me.
There you go.
Okay, you click on start a free trial, and then just put in the information. No credit card necessary. You join the room for a couple weeks. Some very, very active and bright traders that have been with me 10, 15, 20 years really know their stuff. It's a place where you can stop chasing stocks and access the ultimate technical analysis service for day and swing traders. And I look forward to seeing some of you in there with us and enjoy the ride.
I know you are friendly with Avi Gilbert. Is there any general ideas that he's shared with you that you think might be important?
Yeah, Avi was calling for the possibilities of one more major high, but then recently, with the way the market came down, he said if we break any lower than the recent lows, he feels like we're in a new bear phase, and maybe one that lasts a long time. So he's carefully monitoring this for one more wave up that could take us into what he said as high as 63.50 in that range there before we roll over. And he's very cautious about the long term. He really feels the market's set up for a major bear market. But right now, because of where we're at, he's also looking for a snapback rally like I am. Question is, I think this next rally is so critical to most people aren't even aware of it. If this rally comes on low volume, and it's already done that on low volume, and the volume doesn't pick up, and we don't take out overhead resistance at that recent high and moving averages, and we start to roll over and take out the double bottom, we could put a fork in this market for a while, and maybe have a very, very tough time going forward, and through maybe even through the summer. Just have to see what happens. Again, I don't like to forecast. I like to let the market tell me what to do every day.
Absolutely. Hey, Hans, can you share again any other ideas or how people, how you can help people out? And, do you have any webinars coming up or any type of special offers?
I don't have any webinars coming up. I always have some offers, but people want to check me out, you can go to optionswithhans.com. So I've been doing this a long time, market maker for 15 years, ran 9 option income funds for a decade as well on top of that. So I've managed about $1 billion. So, options and volatility are my thing. I've got a course called the Options Volatility Ninja. That is really, really terrific. You're going to learn about some of the things I talked about today, just really understanding sentiment, right? So kind of what we were just talking about, which is this game is more than finding good setups and good trades. It's about, managing your mind and managing sentiment, really. When you're an option trader, you're a volatility trader. So you better understand volatility like the back of your hand. So you can go and check out optionswithhans.com. I've got these free books. This one I just put out. It's 125 pages, free to you, exactly step by step how to get involved in options trading, options selling for cash flow. Lots of cool stuff in there from Volatility Ninja. I take little bits and pieces, put it in there. Really, really great giveaway. And also the Crush the Premium giveaway. Totally free to anybody who wants to come check it out, optionswithhans.com. And I'd love to have you over there.
Sounds great. As far as Option Professor is concerned, we do have an options alert service, and you get 3 things right off the bat. The first thing you get is a options masterclass, which is 6 hours of study, and that comes for you for free. You also get ideas every Sunday night put into your inbox, and it includes coaching. So I talk to you individually and specifically about some of your challenges and help you to learn more about how to trade these options. So that's optionprofessor@gmail.com. And be more than happy to help. Okay, this was a great session, you guys. Harry, Alaina, and Hans. This was a very great time to talk to you, and we're going to be talking again, of course. But I want to encourage everybody. Contact these guys, let them help you, and then again, until we meet again, good luck and good trading. Now I'm going to turn it back over to David.
All right. Yeah, excellent discussion. Ton of great info today. So just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube and on Substack or your favorite podcast app. Also, you can always just go to TimingResearch.com and access any of the full 10 plus year history of Timing Research shows and presentations there. So, and then to close out, just want to thank my panel again for today. Harry Boxer of TheTechTrader.com. Alaina Nicole of investingbay.com, Hans Albrecht of crushthepremium.com, and the Option Professor of optionprofessor.com. Thanks, everyone.
You're welcome. See you later.
Thanks, everyone. Have a great week.
You too.